Annabel, as always, thank you for your time this afternoon. Let's start with those figures we saw coming through from the PMI and really the drivers we can expect to see in the third quarter.
Look, I think, it is a bit worrying because these are the second quarter figures that you're talking about. And of course, if we have a look at industrial production, which is mining, manufacturing and electricity production, for the first month of the reading for the second quarter, April, that actually showed a contraction of close to 11%. So it looks like the second quarter is disappointing at its start. Hopefully it does pull through and we do get a stronger year. But I think, there are still some underlying concerns in the South African economy. And of course, obviously, these coming through in today's numbers.
Right, Annabel, first of all, congratulations. I did read your release weeks before this particular release, and you actually had predicted that it would be below 50. But this is wider than what many of us anticipated. We could have thought maybe 49.0, but this is a bashing.
And I think maybe we should just take it with a pinch of salt and say it's 1 month's reading and let's see how the next one performs. Because essentially we see quite a good correlation between the manufacturing PMI in South Africa and that same month, when it does come up, manufacturing production growth rate month on month. So it tends to be a month-on-month indicator and not a year-on-year one. Look, essentially, we do tend to get quite choppy data in South Africa. 1 month it can be high, 1 month it can be lower. But I think we are quite concerned that the South African economy has not lifted off this year, as was expected. We are not seeing substantially fast economic growth. And of course, now there's a risk, obviously, with the very severe global risk-averse climate that we're seeing. We're talking about the trade concerns, obviously trade relations, but also obviously looking at higher interest rates coming through from the US. All of that's forming a backdrop for South Africa, which is not that supportive either.
And I don't know, I don't get your thoughts. I feel like it's not going to get any better anytime soon. You've just mentioned the trade wars, currency not looking too great, inflation outlook based on the oil price as well. What are you forecasting?
Business confidence is also down. Business confidence
as well. So, I don't know. What are you thinking?
What am I feeling about the temperature? Yes. Look, I think we certainly are a bit concerned about this year. We expect the second half to do a bit better from a growth perspective. But of course, now there's the risk of interest rate hikes coming in. The Reserve Bank hopefully won't react as soon as this month, the July meeting. But we have got an interest rate hike. We've had one penciled in for a while for the January 2009 meeting. It may even be brought forward into November. Of course, on the other hand, we've got this very, very weak economic growth environment. And of course, substantially higher taxes. I think that's actually what's subduing a lot of confidence in South Africa. The VAT increases, the other consumer taxes. We're hearing now that municipal rates and tax increases will be forthcoming quite soon. Of course, the higher petrol prices as well. And of course, we're obviously sitting with a consumer who hasn't recovered yet from the damage for the last few years. So I think, it's going to be a patchy year. And we have just actually revised our GDP growth forecast down to 1.4% from this year. We had 1.8 at the start. We then had 1.6 in the second quarter. Now we're looking for 1.4% for the year. Please God, it doesn't come out any lower. But, the risk is that we obviously get a contraction in the second quarter because already the figures are looking quite poor for Q2.
Annabel, do you see a correlation between the business cycle and the PMI figures? Is this a matter of correlation or causality?
Sure. Well, look, we certainly see a correlation. We certainly see a relationship between the leading indicator in the business cycle and then in turn with GDP growth. Again, we obviously see a lag of 2 quarters with fixed investment on the back of what business confidence does. So a bit of a worry that Q2 fell for business confidence because that means that in the second quarter of this year, obviously now we're quite concerned we might get an even weaker investment outlook. So that's not great. But having a look at the PMI itself and the business confidence, again, I'd probably say just 1 month's reading. Perhaps we'd wait for a full quarter's reading and then we could see if there was some type of relationship. But certainly, I think if you look at the PMI, it's a leading indicator. So it's telling you, what's going to be coming in, and manufacturing production itself, which is what it's foretelling. Manufacturing production itself is part of the whole GDP event. So hopefully things lift up from here. But I think unfortunately we've taken a bit of a confidence smack in South Africa recently.
And I suppose part of that confidence is the mining charter, all of these policy implementations.
Policy uncertainty,
exactly.
Not knowing which way things are going to unfold. We hear from perhaps the ANC that the EWC, the expropriation of compensation, is not going to be destructive for the economy. But then investors don't really know which way things are going at the moment. And of course, we've got the elections coming up next year, which is tending to be such a significant event that obviously a lot of policies are even going into hiatus. We're not really seeing the growth momentum coming through. It just adds to the uncertainty in the environment. And we were expecting a lower level of uncertainty in 2018, so possibly a bit of disappointment coming through now as well.